Let's get our market guest in. Nischal Maheshwari, Head of Research at Edelweiss Securities, joins us from the sidelines of the Edelweiss Southeast Asia Conference. And it's interesting that we get him ahead of that conference because there's been so much talk about this India versus China story. Nischal, hi, good morning, and thank you for joining us. What's the mood like at the conference in Hong Kong? And with respect to the Chinese markets, what exactly are people saying? Is it overheated, or does it still look like a better opportunity to put money in versus India?
Morning, Sonia. I think there has been a lot of interest as far as India is concerned, but obviously I think if I would put it on a relative basis, it is slightly lesser than what we saw last year. Yes, everybody is talking about the China inclusion of A shares into the China thing, and that has been a worry which most of the funds over the last 2.5 weeks of my tour in Europe also and US, everywhere this thing was raised. What I see here, it's more of a liquidity-driven situation rather than saying that there is fundamentals there in China to actually do a lot of investment. But what I gather from most of the fund managers is basically that since they have been underweight for a long period of time, they necessarily need to do a bit of catch-up. But as we have historically seen that basically most of the market where there is a lot of froth come back to its fundamentals, I think possibly it's going to happen over a period of time in China also.
Okay. Nischal, your conference I think is titled India Euphoria 1 Year On or something on those lines. Give us a sense in terms of whether investors have seen as much of euphoric gains as they would have liked to, and now they're possibly consistently pulling out. And what's the perspective for the next 1 year? Which are the key reforms? What are the key things that they would like to see on the table for them to possibly get even more euphoric?
I think most of the investors are pretty happy. They are, for the last 1 year, I think there was a good return of almost around 30%. And so people are saying, yes, last year was outstanding, basically, some amount of catching up and some transition phase, basically, of expectation has to happen. And that's what is happening in the current year. But I think sooner or later people are very, very enthusiastic and trying to figure out what really is happening in India. And I believe if there is more correction on the horizon, basically, then definitely what we are looking for is people coming back and looking for ideas again. As far as some of the important things people are awaiting, I think one of the most important things is the GST, which is going to be a game changer for India. And I think most of the people expect it to happen around in the monsoon session. And that could easily add to around 1 to 1.5% GDP when the first full year of GST gets implemented, which I believe is going to happen in 17, possibly half year of 17, but 18 definitely a full year of it. And we are going to see the benefits out of that.
Okay. Just talking about, some of the companies that are attending your conference, you have some of these FMCG guys like Marico Kaya participating in the conference, and you yourself have been optimistic on FMCG names like Imami, Dabur, etc. But this time it's been a bit sketchy. On one hand you have the Imamis and the Daburs, but on the other hand you have the ITCs underperforming. We've seen what's happened with Nestle. How do you approach this space now, and what are the hits and misses in this space?
So we have one company in the conference again, Marico Kaya, where we've seen immense interest basically for both in Singapore as well as in Hong Kong. The way we look at the space, I think there has been, the growth is there, but I think it is slightly muted. And there have been some challenges basically in certain sectors like cigarettes, where the government is not very favorable as far as the smoking is concerned, and I think that's impacting ITC. Again, in case of, I think, the last two or 3 days, there has been a controversy about Nestle. So I think the way we look forward to it is basically somewhere market is trying to figure out ways to bring down the valuations because the valuations had run much ahead of expectations and much ahead of the fundamentals, and that's the way market corrects. So market is actually figuring out reasons for correction, and we are seeing one or the other reasons basically to bring it back to more normalized levels.
Okay. Nischal, one of the companies that are in fact at the conference is Repco Home Finance. There was a lot of talk in terms of how home finance companies will see a lot of interest from, investors, and last year was a very good year in terms of share prices for home finance companies. But the likes of Repco haven't really performed on a share basis this year. If you look at it, it's a return or a negative return of 5% on a YTD basis. What's your sense in terms of, home finance companies? Do you think that the rest of the fiscal we could see them possibly catch up in terms of valuations? Because the earnings don't look that bad for them.
We are very excited about the whole space, I think, and this is not a one-year call basically which we have taken. I think next 3 to 5 year call remains to be very, very positive as far as the housing finance companies are concerned. The whole space itself is, I think, still very, very under penetrated, and we believe there is huge scope, and especially in big states like Uttar Pradesh, Bihar, Madhya Pradesh. I think these are the states where you have seen penetration as low as 4 and 5%. So when these companies start becoming more comfortable with these states, basically I think there is a definite scope of growth. In this background, basically I think Repco, we like them. Their model is definitely different. 45% of their turnover actually comes from a non-salaried class, and I think that's why they have a higher margin, ROEs, all those things are there. Last year, I think the stock ran up almost more than 50%, and I think there is some amount of catch-up which is happening right now. So I think stock looks pretty interesting. Maybe the valuations are a bit stretched, and that's why we're seeing some pressures out there.
Okay. I'll come back to individual stocks, but before that, just wanted to ponder a bit about a point you made a while back, where you said that interest in India is high, but not as high as what you saw last year. So what are foreign investors doing now with India? Are they liquidating their positions, or are they still holding on to their long-term portfolio, but just in the shorter term, sort of, having a bit of a bearish stance?
I wouldn't say it is a bearish stance. Actually, I think it's more of a being on the sideline, and since the correction is a bit of set in basically, and given that the world over the catch-up on China is happening, I think that's where the focus has shifted for the time being. As I was telling earlier, basically, even in case of China, though I'm no expert on that, but given the frothy valuation, some amount of catch-up, after the catch-up happens, I think it's going to revert back to fundamentals, and definitely during that next 1 or 2 quarters, growth should also come back to India. So I think it's just being on the sidelines for the time being in India. I don't see that the interest is low, except for that the attention for the moment has been diverted away from India to China.
Okay. All right, fair enough, Nischal. We'll have to leave it on that note. Wish you a good and successful conference. Thanks very much for joining in and talking to us. So that's